Bitcoin has continued dumping and broke below $80,000 for the first time in months. But is this the time to be panicking or the time to be looking for opportunities? Here's why Bitcoin is dumping and what we expect to happen in the coming months. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you know when we drop latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, not financial advice, and wish you the best of luck in your crypto ventures. Alright guys, so pretty much exactly what we didn't want to happen has happened, unfortunately, and this is where we are. We're underneath $80,000. We went down to around $78,000 earlier this morning, and it is very possible that we come down here towards the $73,000 level, which is the top of the last consolidation. It is very possible we come down here because we have this large inefficiency. So what I wanted to see was last night when we were around $89,000, I wanted, if possible, us to just come down here, take out the stops here, and then reclaim this level, and then continue higher, and this would hopefully form a base for a support. That has not happened. We've broken straight through it, and unfortunately, as you can see here, this is a lot of inefficiency. There is no support here. So as we go down, the next big level of support really is around $73,000. So because we haven't built up a level of support, we have no main North Star in the crypto industry really. There's nothing for us to really look forward to. We're having a very hawkish Fed. They don't want to cut rates yet. The stock market is dumping as well, and it's overvalued. And then all these things going on with tariffs, which we'll get to in a minute. So there's really no good news happening for crypto outside of just like all the industry stuff, like the SEC dropping, lawsuits. All that stuff is good, but there's nothing for people to really buy right now. There's no reason for people to be buying Bitcoin other than the fact that it's a good hedge against inflation and all this and that. But we have no clear North Star. So since we've broken underneath this $85,000 level, it does feel like it's a lot more possible that we come down here, unfortunately. It's very possible we come down to the $73,000 level and we hold above here, and maybe that's the level which we then take off from in, a couple weeks from now. Maybe that's going to happen. It's hard to say because, I didn't even expect this to happen. I didn't expect this just a straight week down. If you look at the weekly chart, this has not been the best week for Bitcoin. I mean, if you look at this chart, it doesn't look great. But what it does kind of remind me of, and I'm looking at this, it reminds me of the 2021 chart where we were kind of expecting this, everyone was kind of expecting sell in May, go away, maybe the summer's choppy. But this time it kind of looks like the 2021 chart, although it's just happened earlier. And maybe this is because we're getting front run by, the hedge funds now. And so they're playing a much smarter game. They're selling obviously before May. And so maybe it's possible we have this kind of like run up again afterwards in a couple months, maybe over summer. Usually everyone goes away for the summer and the markets are kind of slow, but maybe this summer is going to be the one that takes off because no one's expecting it. I'm trying to think of different scenarios in which case, the market hasn't gone the way anyone has really thought. And so I'm trying to think, what would the market do differently this time? And maybe this time it sells off and we, have a slow grind up, and then summer is very explosive. Who knows? But it does look very similar to this 2021 cycle right now, where we had this, big weekly candle down, and for a couple weeks we went down, and then we just consolidated, and then we took off again. Right now, it's kind of looking like that right now. Unfortunately, it's very possible we have another big, weekly candle that takes us down here, and then we consolidate like that one, and then we continue higher. Something like this is pretty much how the last one is drawn out. So hopefully that is, how we go towards the later half of this year, and it's not actually over, which I don't think it's actually over. But now to some kind of copium, I would say. Standard Charter has predicted that Bitcoin could hit $500,000 before Trump leaves office, which is in 4 years. So here's a bit of copium for the market right now.
Headlines. Hopefully we get some regulatory clarity in the US too, and that can see, again, a lot more traditional players entering the market. Probably that will see volatility come lower, and again, that should add to that medium-term top side potential, which for me is Bitcoin up to $200,000 this year and $500,000 before Trump leaves office.
So the fact is, I still think it is very much possible we could hit $150,000 to $200,000 by this year. $500K before Trump leaves office. Possible it's during the next Bitcoin, halving cycle. So it is possible. It just seems very far-fetched in weeks like this. But I will say, Terrence Michael has a good post here. He says, this is bullish for Bitcoin. Historically, when the emotionally challenged Taurus who don't understand Bitcoin have driven this index down into the fear zone below 25, we've followed up with massive surge in price. So he's showing the fear and greed index, which right now we are hitting a very, very low number. We're currently sitting at 10, an even lower score than when scam bankster frauds FTX collapsed. So in December 2018, we had a score of 8, and within 2 months, we surged 330% from 3,200 to 13,800. March 2020, we had a score of 9, and within 1 month, we surged 75%. 2021, a score of 10, surged 33% in 2 months. November 2022, a score of 20. Within 2 months, we surged 44%. 2023, 22. In 2 months, we surged 67%. August 24, 17. 3 months, 80%. And 2024 of September, 22, 1 month, up 20%. I do think we'll have something very similar. Right now, we are currently sitting at around extreme fear at 10 on the fear and greed index. And every time that happens, it does usually mark a bottom. Now, I'm not going to say it's going to go up, tomorrow, but I do think that when we hit these extreme levels of fear, it is a good opportunity for, at least some upside in the coming months. So 1 to 2 months usually seems to be the area that we surge from. So if you take the average of all of these, it looks like around probably 50% within the next 1 to 2 months, which would take us from, if we were at these prices, 50% would take us up to $121,000. But if we head down to 73,000, 50% from here would take us back to around $109,000. So we'd be back here at the same all-time high levels within 1 to 2 months if we do have a similar kind of thing that Terrence is showing here. Then also we have why Bitcoin is crashing. Now, this is a potential theory. I've seen a couple people post about this. I've seen some people at hedge funds saying this isn't the exact reason, but I've also seen other people who are in hedge funds saying something similar like this. So why is Bitcoin crashing? The cash and carry trade that's been suppressing Bitcoin's price is now unwinding. Here's how it works and why it's collapsing, sending shockwaves through the market. So this kind of reminds me of the Japanese yen carry trade that we had with Bitcoin back over the summer. Where not Bitcoin, but sorry, the Japanese markets were crashing and then also sent Bitcoin and the stock market's down. So anytime a carry trade unwinds, it seems the market's nuke. So for months, hedge funds were exploiting a low risk yield trade using Bitcoin spot ETFs and CME futures. This is how it worked. You buy the Bitcoin spot ETFs through BlackRock or Fidelity. You short Bitcoin futures on CME, farm the spread for 5.68% annualized returns. Some were even using leverage to juice the returns into double digits. But now it's imploding. The trade depended on Bitcoin futures trading at a premium to spot. But with recent market weakness, that premium has collapsed. The result, the trade is no longer profitable, funds are exiting en masse, and Bitcoin selling pressure has skyrocketed. Just look at the brutal ETF outflows. Over $1.9 billion of Bitcoin sold in the past week. The CME open interest plummeted as funds closed positions. Bitcoin down double digits in days. The same trade that kept Bitcoin stable on the way up is accelerating the crash now. Now, why is this happening? Because hedge funds don't care about Bitcoin. They weren't betting on Bitcoin mooning. They're farming low risk yield. Now that that trade is dead, they're pulling liquidity, leaving the market in free fall. So what happens next? The cash and carry trade will keep unwinding. Bitcoin needs to find real organic buyers, not just hedge funds extracting yield, and volatility will remain high as leverage positions continue to get liquidated. This is a classic case of liquidity games. ETFs didn't just bring in long-term holders, they brought in hedge funds running short-term arbitrage, and now we're seeing the consequences. The big takeaway, we don't know if the pain is over yet, but it's likely to end once this trade fully unwinds. The ETF demand was real, but some of it was purely for arbitrage. There was genuine demand for owning Bitcoin, just not as much as we were led to believe. Until real buyers step in, the chop and volatility will continue. For final thoughts, the cash and carry unwind is brutal, but it's also necessary. ETF outflows equal more forced selling, but this flush will eventually set up for the next leg. Survive now, stack later. I've seen this from a couple people, some people saying that's not the exact reason. I think the exact reason is a combination of that, but also the tariffs, which we're about to get to in a second. So I think it's kind of a combination of a few things like that. It's not just one or the other. But yeah, it has unwinded much worse than we could have expected. And this is kind of similar, which took us down here. If you remember on August 5th, August 5th was August 6th, $49,000 when the yen carry trade unwinded with the whole thing in Japan and, borrowing cheap money and that not working anymore because the interest rates got raised. So this kind of seems to be a very similar version, but with Bitcoin directly. And now Bitcoin is very much affected by this. And I could see us probably coming down here to at least $73,000 to hold this level of support. Kind of like I was saying with Ethereum the other day, we very rarely just stop in the middle of an area like this and then just instantly reverse back up. I'm not saying we can't go sideways and create maybe a base here, but it seems a lot less likely because there's a lot more money to the downside here. So it seems more likely that we come down here and continue here as a base than just, stopping immediately here in free fall and then just creating a base here. If you remember, I was talking about ETH earlier, where ETH was like somewhere around here, and I'm like, this probably isn't the exact area where we just V-reverse all the way to new all-time highs. We'd probably come back and test these levels of support, which we're doing now and actually below. We come back and test this level of support and then continue accumulating here, and that's where we form a base, which becomes our next level of support. So just like Ethereum and just like Solana, actually, I was talking about yesterday, where I said I don't think we just stop here at around 135. I think we come down to 127, which we did, and I think we still continue down over the coming day. We form a level of support here, and then we continue higher over the coming weeks. I think that is the same case for Bitcoin. So I don't think this is the bottom exactly. Now that we've broken below, it was possible yesterday that the bottom was here when we were just taking out these wicks. But now that we have, broken down below and we're continuing lower, I think the bottom is probably closer to $73,000. And this isn't what I actually thought earlier this week. I didn't think we'd actually come this low, but with everything that's happening, I think it's a lot more possible that we come down here, form a new level of support, and then continue higher in the coming weeks and months. And then we also have Lark Davis saying, in my opinion, in the next few weeks, Bitcoin grinds back up towards $90,000. One of two scenarios plays out then. First is an actual reversal is in play as tariff fears subside, negative ETF flows have stopped, and the M2 correlation picks up, meaning the M2 money supply. The bull market resumes with many offside and rushing to buy back and pushing prices higher. Number two, it's a bearish retest of the key range. A rejection there probably signals the end of hopes of any recovery for a while. That is the sell and run point, or neither happen and we just go straight to Goblin Town. So essentially he's saying this level here at $90,000, if we did an underside retest, if we grind it back up like this, came here and then broke down, it would be very bearish because that would be an underside retest and it would just be a lower high. On the high time frame, you see like a lower high like this, and we would continue down even lower. That's one of the scary situations which we don't want to happen. So we want this to break through and reclaim it as a level. So we want to break through. Ideally, what you want for that to happen is you want to form a level of support or somewhere around here maybe. Then you want it to break above and then retest. It's more likely that it will retest if we've formed a support somewhere around here because we don't want it to V-reverse. If it just V-reverses, it's more likely that it's an underside retest and it's just likely to go down. So you want to watch how this plays out over the coming weeks. The longer we form a base, the better, unfortunately, even though that's not what we want to hear right now. The other situation, which he says is basically just Goblin Town. We head down and straight through here. Although I will say, this was a multi-month, this is like a 200-day range. So this is a very solid place for a support to happen. So I don't see us just, going straight down through here because that would be like an apocalypse scenario. And we pretty much already facing that this past week. If you're an American in crypto, you're going to want to pay attention. We found an exchange that gives you the best of both worlds. Want to trade spot markets on over 400 trading pairs and without KYC? You can. Want to trade perpetual markets on over 150 trading pairs with KYC that accepts Americans and Canadians as well? You can. The only exchange we've seen in the market that lets you do both simple spot trading without KYC and perps trading with KYC that Americans can use is BYDFi. BYDFi gives you all the tools you need and without crazy requirements. And right now they have an altcoin promotion going on that you need to see, but it's only going on for the next 2 weeks. Starting with deposits as low as $100, you can start earning bonuses in your account just for making trades you'd be making anyway. With trading volume starting at just 0.5 Bitcoin worth of dollars, you start earning bonuses to help give your account that extra dry powder it needs. So if you haven't checked out BYDFi yet, now's the time to try it. Just use this link down below, sign up, no need to KYC, and just start trading. And then we have Clinton Donnelly saying that President Trump signed an executive order implementing reciprocal tariffs, meaning that if any country imposes a tariff on the US will impose an equivalent tariff in return. One of the key aspects of this policy is Trump's recognition of value-added tax or VAT systems as a form of tariff. In Europe, VAT functions somewhat like sales tax in the US terms, but it's applied at multiple stages of production and distribution, effectively taxing the profit made along the way. The average VAT rate across European countries typically ranges from 20 to 25%, which increases the cost of US goods entering Europe. Trump sees this as an unfair trade barrier and has decided to mirror the cost with reciprocal tariffs on European imports to the US. Now, if European countries retaliate by imposing additional tariffs on American goods, Trump would simply counter with future tariffs, creating a cycle of economic brinkmanship. If this escalates to the point where trade between the US and Europe freezes entirely, Europe would likely feel the economic pain faster than the US. Beyond trade, Europe is also facing mounting financial pressures in other areas. Trump has been pushing NATO countries to increase their defense spending to at least 2% of GDP a commitment that many European nations have long ignored. Many of these countries currently spend 1% or less on defense, meaning they will have to shift significant portions of their economies towards military funding. Regardless, even reaching the 2% target will take a substantial amount of money out of European economies, compounding the financial strain already imposed by the reciprocal tariffs. This combination of economic and military obligations will put European leaders in a tough position, making it increasingly difficult for them to sustain their current policies without major financial consequences. So a lot happening in the world, and all of this is to say, no one really knows what's going to happen with the whole economy and worldwide economy, and these whole tariffs are just really messing things up. And every single day, it seems like when New York Open happens, Trump comes out and says something about a tariff, and the market nukes. So, and then I saw another opinion from Dan Gambardella who says short-term thinkers think the tariffs are bearish. Macro thinkers and investors know that tariffs are going to benefit the U.S. massively. U.S. is the new crypto capital of the world. Upside here is massive. Play the long game. Crypto has the most upside, and it's just getting started. And then moving on, we have Binance, which has added Cpool to its pre-listing section platform, Binance Alpha. Binance Alpha select cryptocurrency projects with growth potential in the Web3 ecosystem based on several key factors, such as community interest, traction, and alignment with market trends. So Binance has added Cpool to their Binance Alpha program. And also, Jacob K says, the RWA waves keep rolling at HK Consensus Week. After Ano Finance's summit in New York City, the momentum around RWAs is only growing stronger at Consensus HK Week. Some of my key takeaways are RWA issuers are ready, spent the week in productive discussions with issuers looking to join our new flagship product Port, the first ETF-like product for RWAs. Institutions are getting serious, the interest in tokenization is real, and the shift to on-chain finance is accelerating. And RWA plus DeFi convergence is taking shape. More collaborations, deeper liquidity, and more innovation is bringing real assets on-chain. Now it's time to stay focused and keep building with a team. More to come. And then we also have Clearpool and their Ocean Weekly Waves serving the highlights of the week from our ecosystem. First, they attended Ano Finance Summit in New York City. And with RWA season here, the US was the place to be. This week was packed with meetings between TradFi and crypto leaders. Number 2, Ocean partnered with Diamonds, the world's largest tokenized diamond marketplace, joined the Ocean ecosystem, bringing tokenized diamonds to expand RWA offerings. Number 3, Ocean, bringing DeFi to the world and the world on-chain. We unveiled our vision for seamlessly integrated RWAs into DeFi. And number 4, Clearpool partnered with Chentide Nexus. This collaboration unlocked compliant on-chain RWA lending, allowing investors to borrow against tokenized positions. And lastly, Clearpool joined Fair with Flare Networks. And Clearpool had a TVL jump of 51% to $107 million in Q4. And Clearpool Finance is releasing another report soon. Just saying. So that is Clearpool, which you can also find a link down below. And then we have Cetus Protocol, which is the biggest DEX on Sui, saying back-to-back great news for the Sui network. Binance just announced support for native USDC on Sui. Now there's zero gap for anyone to access the Sui DeFi. You're lucky if you're already involved with this fast-growing ecosystem with no upper limits. Marty Party also adds, Sui news, stablecoin growth on Sui is accelerating as we near US stablecoin legislation. In my opinion, the majority of retail stablecoin transactions will be settled on Solana and Sui. We can see here the stablecoin supply of USDC is growing rapidly, and most of it is on Solana and Sui right now. Then we also have Everstake, who says Sui made a remarkable progress in 2024, strengthening its position as one of the fastest growing blockchain ecosystems. For network growth and activity, 2.5 million daily active accounts in May 2024, 68 million transactions in a single day, November 2024, and total transactions hit 8 billion by year end. Sui's scalability and adoption are accelerating at an unprecedented pace. And it had a TVL explosion. The base TVL went from 212 million to 1.84 billion, plus 770% gain in the year, with liquid staking 227 million to 2.61 billion, and including borrowed chains 257 million to 3.12 billion. Sui is becoming a DeFi powerhouse. Looking ahead, with TVL hitting 2.065 billion in January 2025 and Delegator surpassing 200,000, Sui's momentum is only growing. By now, you've seen that big post-election pump in Bitcoin and the huge liquidation that hit most of the market in January. But Bitcoin isn't the only one pumping so far in 2025. Did you notice that Sui is pumping as well? It's quickly become one of the leading alts in the market, so let's check out why. Sui is killing it in all the big sectors it supports, like DeFi, where Sui crossed $1 billion in TVL and is almost at $1.5 billion in record time. Sui liquidity aggregator DeepBook launched its Deep token in October. It hit an all-time high in January, and it's almost at a new all-time high now. Walrus is changing the game in decentralized data storage, and Solana builders are now building on Sui with integrations like Phantom and Backpack. Sui even has a small but growing meme coin market for meme coin lovers. If you haven't used Sui lately, then come give it a try and follow Sui's X account for all the latest updates, linked down below. And then lastly for today, we have iExec reveals the 2025 plan for confidential AI and RLC expansion. So iExec, a Web3 protocol, announced a 2025 roadmap which include commitments to enhance the utility of RLC token, deepening AI integration, and expanding its decentralized ecosystem. The plan highlights iExec's multilateral strategy to boost innovation and strengthen its position in the confidential computing and decentralized physical infrastructure networks, or DePIN. So iExec will magnify the RLC token's role in 2025 by enhancing its liquidity and utility across the industry. The new collaboration with Centralized Exchanges will improve trading access, while expanding liquidity pools on decentralized exchanges will deepen liquidity while offering incentives to new holders. The iExec voucher mechanism launched in closed beta 2024 will scale in 2025 to lock more RLC within the ecosystem by simplifying how developers use the token to pay for resources. The iExec team said it'll focus on expanding its trusted AI framework, since trusted AI has become a topic of global concern. Strengthen ties with Intel and NVIDIA, and building on a 2024 gold membership in Intel's partner alliance will fortify iExec's infrastructure for advanced machine learning to align with growing demand for privacy-preserving AI. The iExec initiative will roll out the iApp Generator tool to simplify trusted AI applications, including the development of AI agents. So big things for AI coming. I think 2025 is going to be continued year for AI once the market comes back. And so that is iExec and their plans for 2025. Now, Bitcoin holding a little bit above $80,000. Like I said, we're going to want to see what happens over the coming weeks. If we go straight back up to $90,000 like this, it is more likely bearish, and this is probably where you want to sell things, because we are going to be doing an underside retest and coming back down. But likewise, if we either break above here, we consolidate, then we come up, it's a lot more likely that we're continued momentum going up, and we can break through this and retest higher. But I think the most likely scenario right now, unfortunately, is probably this other option where we come down here towards $73,000 as the market continues to sell off. And Fridays have been really bad for the past couple months, and this is a Friday now. So unfortunately, I think this is the most likely situation, but it's a great place to be loading up Bitcoin for the future, because we don't think that this is the end of the cycle. I don't think this is personally the end of the cycle. I think we are still going towards at least $120,000 Bitcoin this year. So that's the video for today, guys. I hope you enjoyed. I hope you're staying safe, and I'll see you guys on Monday.